Okay, welcome, guys. It is now Wednesday, September 3rd. This is in preparation for Thursday, September 4th trading day. We got some stuff here on the dailies and some of the other charts here that I think are a little bit interesting of what's setting, potentially setting up. But we're continuing our Viewpoints of a Commodity Trader by Roy Longstreet. Your broker. Some commodity traders get nothing but headaches and big losses. Others have fun and make profits. The difference might be your broker. He can be an important part of a successful team effort. He should be expected to place your orders properly and report executions promptly. He can also be expected to be aware of pertinent facts. Well-trained brokers can help some traders solve their problems in such matters as trade selection and money management. A few outstanding brokers have the skill to match the temperament of a trader with types of markets. Some brokers can do their job better than others. Everywhere we look, we find mediocrity. This goes for lawyers, carpenters, doctors, dentists. The list has no end. Why expect all brokers to be outstanding? They are not. Only a few are, as in any other profession. Even if he is tops, it is unrealistic to assume that every broker will click with every trader. A broker is a human being with irritabilities and problems. If he is a capable broker and well trained, he will recognize the customers with whom he cannot establish a good relationship and will turn them over to another broker. If you are having difficulty making a profit with your present broker, it might be a good idea to consider a change. I have known of traders who did poorly with their first two brokers, and the third one produced the miracle. The change in brokers need not be another brokerage house. Very often it can and should be from one broker to another in the same firm. All right, that's a little bit outdated. They kind of shut down the floor, so a lot of that type of stuff is a little more outdated. There are still brokers, there are still ones you can execute your trades through, and as your account grows, you will be in touch with one of the top brokers in your account to manage your accounts, like Linda Raschke or Mark Cook or Paul Tudor Jones, different ones like that. So, the big one. The Bible relates a parable told by Jesus that has application. Behold, a sower went forth to sow. Some seed fell on stony places where they had not much earth, and some fell among thorns, but others fell into good ground and brought forth fruit, some 100-fold, some 60, some 30-fold. Some traders who enjoy the soybean market of 1960, 1961 have asked, when will this happen again? When will it happen again? This is the one type of market that permits an experienced trader to parlay $10,000 into 1.7 million within 6 months. Another parlayed 15,000 into 150,000 in 3 months. Still another made $280,000 from 60,000 in 30 days. This happened within the past 12 months. When will we have a market that will permit building such fortunes again? This is this is a most important question to most traders, even though they trade the small moves too. It is the one big move that makes it possible for a trader to take 9 losses and 1 profit and come out in the black. This is possible in commodity trading where one cuts his losses short, but lets his profits run. As with the British, who have the reputation of losing every battle but the last one, it is not necessary to make a profit in every trade. I know of traders who became discouraged with the mediocre results of 1958 and 59 and 60 and picked up their chips and quit. Those who persevered through 1960 and 61 realized that what had not happened in the previous 3 years could and sorry could and did happen in 60 short days in 1960 and 61. The net results for the period were amazing. The move, such as occurred in 1960 and 61 in soybeans, does not occur every year. Since 1950, there have been 5 such moves in soybeans. There was a gap of 4 years between 1955 and 1956, and the 1960 and 61 year. While such moves occur rarely in a specific commodity, there is usually a move of moderate degree in some commodity each year. In 1956 and 57, it was oil. 57, 58, it was cocoa. In 58, 59, it was meals. In 59 and 60, it was meal. The big one may or may not occur this year, but it is worth waiting for. All right, I think one final one. Yeah, let's do one final one here. Playing the big one. A most important question that each trader must answer for himself is why trade anything but the big one? I have known some who only play it for the big money. My previous boss, Mr. AFCA, had the patience, knowledge, wisdom, and character to do so successfully. Far too often, those who play it this way do not have adequate information to pick the big one. It is difficult to forecast them, or they make the negligible amount compared to what can be made, or they may lose their head completely. I have known people who have been carried away by the quick, large profits that were beyond their expectations. The answer to this question must be different for each trader. For myself, I find the profits and the knowledge gained from trading in the smaller moves most helpful in taking full advantage of the big one. The heritage of the past is the seed that brings forth the harvest of the future. I have that section underlined there. All right, another question of great importance when the big one does occur is what should I do about it? There are many traders who did not make money in the last year's big one. They did not know what to do with the ball when they got it. I have this next section underlined. Take full advantage of such a move. One must be prepared mentally for it. Believe that it is possible. You must be there when the big one gets going. Secondly, have the power to act. Third, be rested mentally and physically. The big one is exhausting. Fourth, play it right. Let your profits run and cut your losses quickly. This is a different program than one used on the little moves. You can pyramid the big ones. Winning the big one is not unlike winning the World Series in baseball or the National Opens in golf. It does require some experience and ability. Making big money on the big one is not easy, but it is possible. Thought that was great. Looking for those big days, those moves. And that's part of doing the homework is knowing when that has a possibility of happening, when the probabilities are higher for that big move there. All right, let me just mark one thing here. Okay. All right, so onto my notes here. I have so this 4-period moving average, which we're coming into right now with the Asia session, is this blue dotted line. The 5-period is the yellow line. So I have a watch for this blue line, which currently is at 64.63, so I have that as a potential rejection point. Additionally, I have my 64.63 up to 64.84 zone that I highlighted in green here. This area here is when we made our last significant tick zone when we were moving up here back on the 22nd. So on August 22nd, when we did that flash up there and we started hitting those significant ticks, that's what I have posted as that zone. So we're coming in kind of meeting that as potential resistance. We touched that almost twice today. However, we do have the 2-period rate of change flipped up. So I discount this day. This was a holiday day right here. So this was Friday, Tuesday, Wednesday, and then this is tomorrow's price action here starting in the future. So Friday's action was down. Tuesday's action was down. Wednesday, we kind of moved back up a little bit here. We did have this flip up in the 2-period rate of change. Matter of fact, that actually from where we closed out on Friday to where we closed out on Tuesday was very small, negligible difference there. So that led to a possible flip up today as a buy day because we did move back above that buy zone. So we have had that flip up in the 2-period rate of change. I talked about that buy zone when that 2-period rate of change flips. Let me pull in this chart here or this here. This is one of my homework sheets here. It's the radar scanner with some extra information attached to it. So right now we have tomorrow as a buy signal in the ES. The short-term pivot that I have in that is 63.9975. So it basically that would flip over from a buy signal to a sell signal below that 63.9975 zone. There's nothing exact about that. But the 63.99 is all the way down to 63.99. Okay, so here let's pull it out here. There we go, down toward the bottom of the candle. So 63.99 is this is 97. So this is 63.99 all the way down down here. So 6,400. So we would basically have to come back down, eat into this, start eating into this tail, get down towards the bottom of that tail. We could flip it over, flip that 2-period rate of change back down pretty significantly to have that as a short. Now, this also that zone or that flip of that 2-period rate of change can flip the intraday, and I'll be keeping an eye on that intraday. So, but right now, like I said, we're showing a buy signal on that for potential continued follow through. However, this green zone, the extreme tick, we've moved down below it. If we continue to have buying up into it, then I want to be, especially if we get back up on top of this, then I want to be careful shorting that. So we start moving back up into that zone, that shows strength. If we reject off this zone once again, then that would show weakness. So I am watching that. The slow, okay, oh yeah. So on this slow LBR, so this is the slow line on the daily chart on the LBR. You can see, we've held this since back in April, I believe it was. So yeah, April, early mid-April there, we made that spike down, came back up. So we moved above this at the end of April. Well, since the end of April, we have stayed positive on that slow line on the LBR. Well, once again, we're starting to a little taper off. I'm keeping that in mind with the monthly bias for September, as to see if we're going to actually dip below the zero line on that slow line, which I believe that is very, very possible in the next weeks here. So we're keeping an eye on that. So we're moving back down in the slow LBR. All right, my gap chart. So you can see here, I have this zone down below here. So we have this gap down here that that has not been filled. That's from back on early August. So that has not been filled. We started pushing up into these current two gaps. The closer of the two is this one. So just, if you're just using proximity, we have a higher probability filling these closer gaps up here. One moment. Boom, boom, boom. Hey, why aren't you moving? There we go. Okay. So yeah, we have a higher probability of filling these gaps here if the market were to choose to do that. But like I said, we are hitting right at the bottom of that extreme tick zone that took place back on the 22nd. What's this? So yeah, this is the 22nd. So here's that big extension up. Then we kind of just went sideways there. So we're coming to that extreme tick zone here. So we kind of hit it this morning at around 11:30. We came back up here again into close. So, are we going to have another rejection, like I said, or move up into that gap, into that extreme tick zone there? Keep an eye on that. Okay. 15, 30, and 60-minute chart. Let me pull that over here. Okay. So on my 60-minute chart, zones, overhead resistance potential. Okay, yes. So you can see here, these teal lines that I have on here is that extreme tick zone area, 63.75 up to 84.25. Well, we came up, almost hit that zone back on the end of July. Came up there, hit it at the end of July again. So 2 times we met resistance in that area, pushed through it, kind of fell off. Then we did that extreme push up here on August 22nd. Where'd I go? Yeah, okay, here we go. So this is that, yeah. So this is that August 22nd, that we did that push up, hit those extreme tick zones, fell off a little bit, tried coming back up, did almost a false breakout, then broke down. Now we're back up here. So I just wanted to show you on the 60-minute chart. You know, we do have some potential resistance on this lower part of the band here. So that's something I'm keeping an eye on, as well as what pictures showing in the morning on my LBRs. Try and hurry this up. I think that's about it. Into September, show something average in September. Oh, that was it. So here's something interesting. Look back on the daily here. So this is reset scaling here. So here we are. This is 728 over here on this wave 5. That was 728. You see where we opened here on that date versus where we close over here today. Basically, all of August, we've not gone anywhere. So all the portfolio managers are sitting there with basically zero gains, zero losses on their portfolio for the last month. Like I said, that could cause a little bit of the shakeout into September here, or not. But I just thought that was very interesting that for all the portfolio managers that are sitting there, that a little bit down, slide up, slide down, slide up, and then we're still back at almost break even coming into the beginning of the month there. So all right, guys, that's it I have for tonight. That's all I have for tonight. On the internals, I don't think there was anything that stood out to me. Yeah, other than we have on the we bounced off that bottom channel, kind of moving back up here on the SPY. So we did close. Here's interesting. We did close 3 points down on that from that spike high yesterday. So keep an eye on that 1638 on your VIX. If we're below it, that could bode bullish for the markets. If we're moving back above it, that could bode bearish. So keep an eye on the VIX as well, that 16.38 zone to see if we have an over under there. All right, guys, that's it. And we will talk again tomorrow. Thanks. Oh, happy trading and safe trading.